with all this? I guess the main point here to understand is that whether it's the original property owner who decides to, at some point in the history of the property, put the property on the market and sell it, or whether it's the heirs who in the future decide to sell the property, it's pretty simple. If the property is worth $300,000, you're going to put the property on the market, sell it for $300,000. You're going to then, from the sale, pay off the $145,000 that are owed, and there is $155,000 in gross profits, right, that belong to whoever's selling the property at that point, whether it's the original property owner who opted to get a reverse mortgage, or the day of tomorrow if it's the heirs that decide to sell the property. So again, we're going to talk about the flip side of the coin in a second, but in this first scenario, it's basically how the program was designed in a way where everybody has a clear benefit, because the original property owner was able to get $100,000 when they applied for the reverse mortgage. They put that money to good use. Never had the burden of a monthly mortgage payment. They continued with 0 monthly mortgage payments during the entire duration of the loan. And most importantly, continued to enjoy the property, right? So they have a clear benefit, several benefits there, if I may say so. But the bank also has a benefit, because the bank gave $100,000 to the property owner, but the day that the property was sold or refinanced, they recovered $145,000. So they made $45,000 profit. Now, in this example, they had to wait 10 years, right? But they still got the money. It's no secret that a lot of very popular banks are really not interested in reverse mortgages. Some of the big name brands used to offer it. They really don't anymore after 2008. But a lot of the banks that do offer reverse mortgages have been offering it for a very long time, and have very close relationships with the program and with FHA, and really understand it. So you tend to have a lot of lenders that really just specialize in reverse mortgages. But there's a clear benefit to the lender in this example, because they were able to profit $45,000. And guess what? The federal government, FHA, actually has a clear benefit here too, because they designed a program that, works, and they had to invest zero in this first example. It didn't cost them a single dollar, right? But we have to talk about something else now. We have to talk about this second example right here, right? What happens if the day I'm no longer around, I have a reverse mortgage, and 10 years go by and I'm no longer around? What happens if my heirs inherit the property and it's 2008 all over again? What I mean by that is that for some reason property values have dropped, and now we're talking about a scenario where my property value is only $100,000, but my debt, my reverse mortgage debt, is $145,000. So I'm basically underwater, or, more precisely, it seems like my heirs are underwater, right? So at face value, this looks like a very serious problem, right? Because now my heirs not only are not able to pull out any profits, any equity from the sale of the property, but also they are literally underwater. They may jump to the assumption that there's a deficiency here, right? And that they can actually lose some money, right? Well, this is where the non-recourse aspect of this program kicks in. And we're going to write that down, because that is an important factor: non-recourse loan. Okay? So what does that mean? We always understand that FHA designed this program to assist property owners that are in retirement age. But what's the involvement of FHA in all of this? Well, FHA tells lenders, go ahead and offer this loan. Please participate in this program, because we are really assuming that the first example is the most likely example because of, once again, inflation. We understand that property values tend to go up. But if this second scenario occurs and the property value falls below the amount of the total debt, you, the bank, this is FHA talking to the bank, you, the bank, are not going to be responsible for the loss. The original property owner, if they decide that they want to sell and they find themselves in this situation, they're going to not be responsible for the loss. And the heirs are definitely not going to be responsible for the loss. They had nothing to do with the loan. Heirs don't participate in the application process when the borrower is applying for the reverse mortgage, so they have nothing to do with this. But we, the federal government, have insured this loan, and we will cover any deficiency or loss that exists in a reverse mortgage. That is the non-recourse aspect of the loan. So how does that specifically work? Well, let's dive into it. If my heirs actually inherit the property and they are in scenario number 2 where there is a deficiency, they will have an additional option. They can get the property appraised by an FHA appraisal just to show that the property is in fact worth $100,000. And then FHA actually allows them to refinance the property if they decide that they want to keep it for 95% of the depreciated value, which in this example, 95% of $100,000 would be exactly $95,000. Now, right away, the bank's going to raise its hand and say, wait a second, this is great for the heirs, right? They're, getting the property for $95,000 with a refinance. But what about us? We gave $100,000 10 years ago. We've waited patiently for 10 years. And now that the heirs have the property and they're refinancing, they're just going to show up with $95,000. That's a loss for us. In fact, the reverse mortgage right now is at $145,000. So from 95 to 145, there is a $50,000 loss to the bank. So the bank is not happy about that, right? Well, that's where the insurance aspect of the FHA program kicks in, and FHA will pay. So FHA pays the bank the $50,000 loss. So what does all of this mean to the banks that participate in this program? Number one, what it means is that their investment is insured by the federal government, so they are protected from any potential losses. But most importantly, what does it mean to the property owners / borrowers that are considering the reverse mortgage, right? What does it mean to them?